All right, welcome to my weekly report. You're looking at a daily chart of the Nasdaq, and after a furious rally from 12,543 on October 26th, the Nasdaq rallied up to December 27th at 15,150 there before reversing. Now that's a 21% gain in the Nasdaq, and since that high there on the 27th, it's pulled back 4.5%. And you can see on the weekly, if I go to the weekly, in 2024, it's down 3.25%. And just a pullback. This is, if you did Mike Webster's homework that he asked us to do, this is normal action for the first couple of weeks in January. It's highly volatile and more volume coming in, but you can see, I'm going to show you on the daily that what's not normal, but this is normal behavior. But the Nasdaq was up 9 weeks in a row. Like I said, it was up 21%, and now it's pulled back a little more than 4%. And if I go to the daily chart, what's not normal is during this holiday week, we had way higher than expected, above average daily volume, I should say. And so usually it's a real quiet week, not much going on, but the Nasdaq still continued to have high volume advances until that 27th. And then it started pulling back there on the 28th and the 29th and continued through until Friday, where it stopped going down, but it could have just been a little short covering. I'm not sure this correction is over. I would say after a 21% gain, you got to expect to give back more than 4%, but we'll just take it one day at a time and not predict anything. There's going to be a lot of news this week with the CES show in Las Vegas and the JP Morgan Healthcare Conference in San Francisco, and the retail conference, a massive retail conference going on in Orlando, Florida, that not many are talking about, but there's going to be some, raised guidance, lowered guidance, maybe even some consolidation. There's going to be a lot of news coming out of these conferences, and that's definitely going to move the market this week. So buckle up. It's going to be volatile once again next week. The Russell 2000 now on the I want to say from this low here on the October 26th up to the high on December 28th, roughly 2 months. It had a nice strong gain there of 26%. And now it's given back a little more than 4% and sliced its 21. So Russell, pretty similar to the Nasdaq, a little greater gain from a trough to peak, but given back about the same amount, just a little more than 4%. Actually, I misspoke. That's a 6% loss. So it added a little more, 26, and gave back 6. So if you think an index is going to go up 26% and only give back 6, that's probably not likely. I would expect more to the downside, but it could happen quickly. So, we have to be vigilant here. This is the S&P 500. It made a low on the 27th at 4,103, and then topped, like the rest of them at what was it, 47.93 on 12/28. That was a 16% gain in the S&P, and it's given back 2.9%. And this one's doing a little better than the Nasdaq because it's been captured here at the 21 there. Yeah, it is trading above the 21 where the Nasdaq is not. And the strongest index is the Dow Jones, which is only 30 stocks, but I have to mention it. It is very strong. It had a low there of 327 on October 27th and ran up to January 2, or made this high on January 2 of 37,790. So that's a 16% gain for the Dow, and it's only given back less than 1%, 0.86%. And this one's trading right at its 10 EMA. So definitely the Dow is a stronger index. What you want to read from that, maybe the Dow, it's only 30 stocks, but maybe they're better capitalized to withstand a correction. Anyway, I don't trade the indexes, although sometimes I do. Sometimes if like TNA is good and TQQQ when they start rolling, I will. But Mostly I look at stocks, and last week we had a lot of downgrades for Apple, and Apple is one stock where you don't expect to see this big correction here. It would set up in this nice cup with handle, and it got at least a couple of downgrades last week and pulled back to its 200, sliced the 50 down to the 200 there, which is what 180 and change. And I'm a believer in letting them report their earnings on the 25th and see what they have to say. But now we have to wait and see if they. Because a lot of people are telling me that the stores are dead, and the iPhone sales are really bad. So maybe that's true, and maybe they're going to say that at their earnings. So what I look for now is, well, since it's down to its 200, maybe bad news is priced in, and you just want to see how the stock reacts to news in the coming weeks. There's going to be a lot of news here in the coming weeks. So Apple on the weekly, you can see it set up in the base. That's a nice shakeout. But if you're in a correction, it stinks. If you want to get into the stock, yeah, you want them to pull back. So that's the dilemma there. Apple not looking good. Microsoft, once again, this one traded down to its 50, showing weakness. It's been a long time, of just going sideways here. It made that run from like 320 to 380, and now it's just digesting these gains here for the last 6 weeks. It's like a 6-week flat base pattern there, yeah. So anyway, if you look at the weekly, this is a weekly review. You can see the cup and then the 3 weeks tight. Those 3 weeks tight patterns didn't pan out too well. I think it's just kind of like a seasonal stuff where things kind of plateaued towards the end of December. Meta, now people are selling Meta stock or saying it's a sell when the CEO sells the stock, and no, it's not. They need to diversify too. Anytime management sells, it's just mostly routine. They can't let their options expire. Of course, Zuckerberg is the owner of the company. He doesn't have to sell, but it's always wise to diversify into whatever he wants to, real estate, gold, whatever, other companies. Who knows what Zuckerberg's doing with his money, but to me, that's not a sell sign. This stock just pulled back to its 21 and found support. Meta looks pretty decent to me. Google as well, set up in this base, but it sliced its 21. And this 50 is downtrending, which is a little bit of a concern. If you're a long-term holder, I wouldn't worry about it. But if you're a trader, it's like this thing needs to show some strength. If you look at the weekly chart, lower left to upper right, Google has been a big winner for a long time. So what was the other one that I wanted to show? Come on, Amazon, one of the Mag 7s. Pulled back to its 50 last week. Don't like the action here. They once again, they were downgraded. There was a lot of downgrades last week where these companies were coming out. The institutions were knocking these things down first part of the year after the big run up. But like I said at the open, this is kind of normal behavior for January. Anyway, Amazon pulled back to the 50. You just got to give it some time. It had a nice big run up here from 118 to 155. So give it some room. Let him breathe. Tesla doesn't look too great either. It's got this double bottom pattern. It just can't get out of its own way. Traded down to its 50 on Friday. Yeah, it's just it's got no juice, man. It's got no mojo, and it's been down 6 days in a row. Yeah, it's got to get some buyers. More buyers and sellers would be nice for Tesla. But obviously, if you look at the longer term picture, if you're a longer term holder, it's lower left to upper right. And now it's just consolidating these massive gains from 2020, 2021. And this is a massive company with a lot of irons in the fire. So, I wouldn't count out Elon Musk at any time. It's just going through some pains right now, short term. And NVDA, this is all short term stuff. This is another double bottom pattern. Looks a little better than Tesla. Why? Well, it's above its moving averages there. It's above the 1% above the 10, 1.5% above the 21, and 4.2% above the 50. So obviously doing better than Tesla. That doesn't mean it's a buy or anything. It's I would say this is probably one of the Mag 7 that I like, along with Meta platforms, because they're performing better. I like stocks that perform, so they're performing best. All right, I mentioned the downgrades. I'm going to go to the software sector. By the way, full disclosure, I don't own any of those Mag 7. I just cover them because they impact the market. This is a Monday. This is a software name that was downgraded, handled it pretty well. What I look for when stocks are correcting, yeah, this is slice is 10, slice is 21, but it held above the 50 and it stopped going lower. On this day, it made a low of 171.42. Then it came down to 170 on Thursday, and then it bounced and closed at 176.79. So if that's the low, 170, I'm okay with that above the 50 SMA. That's what I'm looking for. These software names from to stop going lower, stop the bleeding, just go sideways. They don't have to go up, just go sideways. There's your 3 weeks tight that didn't pan out. I don't think any of those 3 weeks tight patterns panned out last week, as the Nasdaq was down 3-something%, whatever I said, 3.25%. So you got to expect most of the stocks to go down. The growth stocks are going to go down 2 to 3 times the index. So if the Nasdaq goes down 3% in a week, you can expect your stocks to go down 6, 7, 8%. That's pretty normal. This is Snowflake, which once again made that low on Thursday. This is another stock software name that was downgraded, made that low on Thursday of 180.95, then popped back up on Friday 189. So it's $9 below that low. Once again, you could see this consolidation and the pullback that could be construed as a shakeout. We just got to wait and see. Maybe a greater shakeout is coming, but just take it one day at a time. Snowflake's a stock that I like, high valuation growth stock, and is very volatile. Datadog is another one that I like, but it stopped going down as well Thursday. Made that low 110.70 and popped back up, $6. So Datadog looks good as well to me. If you look at the weekly chart, you see the big consolidation, which I like. The bigger the base, the higher in space. This one has been consolidating since August of 2022. Made this cup with handle pattern, had a run up. There's your 3 weeks tight, and then pulled back to its 10-week line. So Datadog looks fine on the weekly. It's just like I say, when they go through these corrections and you own it, it really stinks. And if you want to own it and looking to buy, then you want these things to come in a little bit. This is ESTC. This is another one, kind of like Datadog, would have this big consolidation pattern, but this one moved higher out of the base, and now it's pulled back, sliced to 10, sliced to 21. But kind of flattening out here, and I'm okay if it just trades between 105 and 100 for a week or so. That's fine. The short-term moving averages are curling lower, obviously, but it's got to stabilize and consolidate at some point. And a flat base pattern here would not be the worst thing in the world. You could see the longer-term moving averages are trending higher. So it just depends on your time frames. So yeah, those software names stop going lower. I'm going to get out of the software and get into something that I really like. And that's the biotech names. This one I've been talking about for a long time, had a gap to fill here at 1956 and did that on Friday. They present at the JP Morgan conference on Tuesday afternoon. There's speculation that the CEO might release sales numbers, but that's just pure speculation. Still 45% off of that high that it made last May. But looking good. It's above the moving averages. You're seeing these short-term moving averages trend up above the longer term 200. So yeah, TGTX looks good to me. The other ones that I have to mention that were on our watch list last week is Eli Lilly, definitely a dominant player in many areas. This is just a beast of a stock, and a little slower, mover stock, but right now it's in a flat base. It did not participate in the year-end rally, the November, December rally, and now it looks like it might want to. It was up 6% last week. So that's a good week for Eli Lilly. Same with Novo Nordisk, did not participate. It's got this little flat base pattern. Looks like it wants to move above that 104 area. And once again, yeah, didn't participate. Maybe now it wants to. We'll have to wait and see. But it had an inside day on Friday on the daily chart. So that one still looks good to me. and obviously they're going to Lilly and Novo are first to the weight loss, but they're expanding into kidney and cardiovascular. And I believe Novo has a readout here for, or an NDA, new drug application for their drug for cardiovascular. And if they get that, this stock's gonna appreciate even more. Anyway, EYPT is one that I watch. It's heavily shorted, and it had this big run up on news and pulled back to the 21 and got support. So that's definitely one to watch. Some people call this like a waterfall type of pattern, but yeah, once they stop going down, you got to watch them bouncing off of moving averages. So I got a couple stocks like that. The oil and gas stocks, going to go to the oil and gas. This is Kodiak, one that we had on our ready list at MC stock charts, and this one performed pretty well, I would say. It was up, more than 6%. You could see this is an IPO base and then ripping higher. It doesn't have a lot of volume. It's a quiet stock nobody talks about, so we'll keep the goodies to ourselves there. What else do I have? Oh, Callon Petroleum was acquired. You thought it might move the the other stocks in the group, but no such luck. Oil and gas had a pretty tough week last week, unless you were in the transportation pipeline stock. This is TNK, which had a nice move there out of a base. This is a weekly review, so I got to look at the weekly chart there. You can see a base on base pattern, and it's breaking out of that flat base pattern. Also, International Seaways was up more than 7% last week as it tries to emerge out of this little pattern here, this cup with handle pattern. So that's going to be on our ready list for next week because I think it looks pretty good. And, these are kind of news driven a little bit. I'm going to get to that a little later, but I want to look at the semiconductor names. I talked about NVIDIA, which is the big dog, the big kahuna in this group. But this is Broadcom, and it's formed this pretty rare ascending base pattern with that buy point around 1,150 area. And I'm keeping my eye on this one. It did slice its 10 and its 21, and those short-term moving averages are curling down, but they can curl up really fast too if some buyers step in. So I'm definitely interested in Broadcom and that specific pattern there. AMD, obviously, this is one that ran up on news of their new product, which we always like new product. It's the in can slim. And if you look at the weekly chart, you could see this, broke above the downtrend line. I'll show you on the daily, but it broke above this downtrend line, made a 3 weeks tight pattern, and then ripped higher after Lisa Su announced that new product. But anyway, there's your downtrend here. And I thought that was a buy right in that area there. Then it pulled back, give you a chance at the 21. That was the day that she announced the new product, and it sold off. I thought, man, what a gift. And it just ramped from 116 to like 150. Pulled back to the 21 last week. But, the index pulled back. AMD pulled back as well, 6%. So, yeah, the index pulled back 3.25, and this stock pulled back 6. That's kind of normal behavior. I got to get to the retail. Some of my favorite stocks are in retail right now. Celsius is, one of them. I sold my CrowdStrike to buy Celsius, and people think I'm nuts, but I like the pattern here. It broke above its downtrend line. There's a whale in this stock, and I think the whale has sailed. It swam away. And now if buyers come in and this thing tightens up a little bit, I like it right there above the 10 EMA. I think I got it about $55. So I'm already up on this, but you can see this is just a consolidation pattern. They split three for one stock split. They announced positive earnings and just sold off for a long time. Did not participate in the recent rally, October 28th to December 27th rally or whatever it was. And so now maybe it's going to start to rally. I just wanted to point out it made this low here, and it's been 3 weeks in a row where it's made higher lows. And so that's definitely something to pay attention to in a stock like this. They're going to have tremendous sales growth here coming up when they announce earnings. It made a low there of 48.94, then 49.69 last week. while the market was floundering, it was up 5% and made a higher low of 53.03. So you got to take note of that. Higher lows while the index is selling off. I like that. Also higher highs too. We like our stocks to go higher. ELF is another one. This one, this is the weekly chart of ELF. You can see it did not base since the summer of 2022. There in July, it broke out, just ripped higher, little 3 weeks tight pullback there, give you an opportunity, then boom, gapped higher in earnings, ran up, boom, gapped higher in earnings. And now it's been like more than a year, September. So from July of 22 to September of 23, just a straight run, which is pretty rare. And now it's consolidated in a base there for 14 weeks, had this 3 week tight, sold off 4% last week, which, you know, is a nice little shakeout with the index going down 3.5%. This one pulls back, just held on to its 21 on Friday, 1% above the 21. So definitely one to watch. I don't know if that's a big enough shakeout. You probably get another nice little shake before they report on February 1. But that is a nice little cup with handle pattern. And I'm long this stock as well, and I like it. Bros is one that I don't talk about much, but I have to acknowledge it. Bros is looking better. They're spending a lot of money trying to grow, and that's what young companies do. I'm going to go to the, well, since I'm on the daily, you can see that it's making higher lows, pull back to its 10 EMA last week and got it, you know, I wouldn't call that a bounce, but at least it's hovering above its 10 EMA, which is pretty good for the pullback that we had. But this is just a stage one base that it's trying to move out of. And so when, and this is still, I would consider, you know, kind of an IPO. I mean, it came public, ran up, and then sold off with the market. And now that the market's recovered, this is not, it's still kind of in its due diligence phase. But if it reaches its advanced phase, Bros is definitely one to watch. All right, I'm going to move on, just take a random walk. And I have to mention Zim because this is a pirate news-driven stock. You can see it's been moving on volume. This is the weekly chart. It was up 48% last week, which is a nice start to your new year. The market got a 1-2, a punch to the gut and then an uppercut to the jaw, but we can take a punch. This one was doing the punching. Obviously, it's going up on news. It shows up in my up on volume stocks here back in December, coming off of lows. And then it pulled back. There's the 15th. Yeah, big move there, 18%. But then it pulled back to its 10. Okay, so it made this huge volume move, pulled back to the 10. You know, pretty strong volume as well. Lots of sellers here, not a lot of believers. But then the shorts had to cover here on more news there, and you got another volume push here. It looks like short covering, but we don't care. We want our stocks to go up. We don't care who's buying it, right? And this is massive volume move here. So I would expect another move like this back to the 10. So this thing's using its 10 as a magnet, and I think that would be your buy point there if you wanted to get into this one. It's following the same track as some of these other stocks like AFRM definitely is one that this one actually broke out of a base. There's a stage one base here and then pulled back to the 10. You can see that right here, you know, breakout, boom, and then pulls back to the 10, you know, high volume push, pulls back to the 10, gets support, another high volume push, comes back to the 10. And that's kind of what Zim is doing right now. Well, it's sliced its 10, it's sliced its 21. This would be, you know, considered like a waterfall trade here. If you're into trading, see if it finds support and makes another push towards 50 here. So I'm definitely watching AFRM and Giga Cloud Technology. There's another one, Hong Kong based stock, but broke out, high volume move, right? And then pull back to the 10, another high volume move, pull back to the 10. So these are using the 10 as a magnet. And every time it comes back to the 10, you know, it's ramping higher. So the 10 EMA, which is this green line here, is just a magnet for these stocks. Maybe a little machine trading there. Anyway, like I said, I wanted to take a random walk besides showing you that. Dexcom is a stock that I'm looking at. You got to look at the weekly. Nice cup with handle pattern. I like that one. Schwab, little slower mover. But on the weekly chart, this looks good to me. The bank stocks are going to report earnings this week. Wells Fargo, Bank of America, JP Morgan. That one looks good. Vert is a stock that I don't talk about a lot, but I do own it, and it has just been an easy hold, pulls back to its moving average and finds support. If we look at the daily chart, it hasn't even pulled back to its 50 here. So Vert, these guys have strong sales and earnings growth. Looks good as well. And somebody wanted me to cover Mara, so I'll do that. And anyway, this is, if you look at the weekly, people are saying there's a high tide flag. Yeah, that's a that's a pull, all right, but this is nothing tight about that flag. This is a very volatile stock. And you can see that, it was trading tight. Now it's getting wide and loose. Had an inside day on Friday. But, once again, pulling back to its moving averages and finding support, that's a good thing. Could be a big winner. So definitely one to pay attention to. Anyway, that's it for me, except for I lied. I have one more thing. I wanted to talk about CrowdStrike. So in honor of the great Steve Jobs, I do have one more thing. And this is something that is personal to a trader or an investor or, whatever your style is, you kind of have to know. And a stock like this will bring it out in you. And this is one that I bought at 160 here. And then it ran up to 261, which is a 66% gain. Pretty easy hold. You can see it just pulled back to its 10 a couple times. And this is one of the leaders of the rally from October to November. I knew to buy it because it was getting support as the market was pulling back in July, August, September, and October. And this thing was just, it was being accumulated. You could see right here. And then when November and December hit, this thing, like I said, ramped 66% gain. So now what do? Well, if you're just a swing trader, you take the 66% and you're gone, right? Probably if you're a swing trader, you probably take a 10 or 20% gain and just, get out and go to the next trade. But let's say it's here at 260 and you're a swing trader. There's, a couple options. You can just take your gains, move on to the next. And that's what I did. I took a partial here. Well, I'm going to get to that. So one style, you can just take your gains, take your 66% gains and move on, okay, as a swing trader. Or if you're a long-term investor, you could just, hey, I'm going to hold on to CrowdStrike forever. And like I showed you these charts, I mean, this thing looks like it's going to very easily take out this. It could very easily take out the old high here, as this is in its institutional advance phase here on this IPO. So that's two methods. You can also just, okay, I got it at 160, ran up to 261, you could take half off. Or if you, let's say you had 100 shares, you bought it at 160, that's 16 grand. It went up to 260, that's 26 grand. You could take out that 10 grand profit and just let your principal run. So that's a nice problem to have with CrowdStrike. I think it tells you more about yourself, who you are as an investor or trader, these types of decisions that we need to make. That's a nice problem to have. Me personally, I sold this one and bought Celsius, like I said, because I can always come back and buy this one. I like CrowdStrike a lot. But after a 66% run, I mean, all runners need to take a breather. And if this thing just forms a base or, a flat base or pulls back to its 50, you can always come back and buy it. So I know myself as a trader and I can't sit through drawdowns. I'm not wired that way for it. So you have to know yourself, who you are. Can you sit through that? Or do you want to hold it for long term? Just want to take the money and run? And it's something that you have to be intellectually honest with yourself. And can you sit through another base for a CrowdStrike? I guess is the big question. Anyway, at mcstockcharts.com, we never give up. Thank you for watching. 2024 started off a little rough, but I have a feeling things are going to get better for us because we never give up.